Hello, in this session we're going to look at IAS 19. So IAS 19 is pretty much pensions, at least that's the bit that we're interested in. And I've always remembered this with biscuit. I know that sounds unusual, but stick with me, it should work. Okay, so biscuit. And what this means is we start off with the opening balance on a couple of elements within our pensions calculation. So we've got our pension asset. So you invest the money into assets, and then you've got potential liabilities. So these are the amounts that are going to have to be paid out at some stage. The assets will be a debit balance and the credit balance for the liabilities. These will be given to you in the question. Because they're brought forward from last year, they should be there. Then we've got the items that we need to post in. So you've got pension benefits. Okay, so that's amount paid out during the year. You've also got your increase in assets because there's going to be a return on those assets in the year. You've also got your service costs because people are going to have worked for you for another year. You've got your contributions because the company is going to have to pay in to that balance. So they're paying on behalf of the employees. This bit is unrecognized. And what I'm going to explain to you in a second is that this is all worked out by an actuary. The actuary estimates the closing balance. But because that's unlikely to be correct, there's going to be a remeasurement on this, and it's going to be an unrecognised amount. We don't put it through P&L, so it's going to go to OCI, and it's going to be a balancing figure. But that's how I remember it. And then you've got your interest cost. And that's really the unwinding of the discount on the liabilities. So that's going to be in there as well. And then you've got your total at the year end. And that again will be given to you in the question. Because remember, this is all worked out by an actuary. So they're going to give you the debit balance and the credit balance at the year end on the asset and the liabilities. So all you need to do is first of all, remember those items and then know where to post them. So the benefits paid out, well, of course, that is going to reduce the assets and it's going to reduce the liabilities. So credit the asset, debit the liability. Increase the assets, well, that's going to increase the assets like it sounds, so debit that. And by the way, to get that, to work it out, it's the opening balance on the assets times the discount rate. So you may need to work that one out, but that's fine. Then we've got the service costs. Again, these are usually given to you in the question, and they are going to increase the liabilities. People have worked for another year, so they're going to increase the liabilities. Contributions, well, those are going to increase the assets because the company has contributed more into those assets. I said these unrecognized amounts would be the balancing figure because remember, look, we've got the year-end figure already estimated. So remember, these are estimated at the year-end. It's not going to work out, so the balancing figure is unrecognized. And then we've got the interest cost, and the interest cost is going to unwind the liabilities, so it's going to increase the liabilities, and you work it out the same way as we did on the assets, except it's the opening balance on the liabilities times the discount rate. Once you've done this, you have calculated everything that the examiner can ask you on a pension. So for example, in the P&L, the items you'd be looking for would be service costs. Okay, well, the service costs we did, and there they are. You also have the net interest cost. That needs to be disclosed. Well, the net interest is the net of this interest unwinding on the liabilities and the increase in the assets because there's been a return on them. So it's the net of those two goes to the P&L. In OCI, you have the remeasurement component. And that is the balancing figures that we have in here. So the balancing figures, these are the remeasurement component. And then in the statement of financial position, well, there you have the net pension asset or the net pension liability, depending on which way around it is. Where do we get those? Well, there it is at the end. So down at the bottom, these come in as the net pension asset or liability. So actually, pensions are really, really easy if you know this. Remember Biscuit. Remember that you need it for assets and liabilities. Learn the debits and credits and learn your disclosures. Know that these are the elements that are required in the financial statements, and you should get most of it right. One last caveat, if there are any adjustments to a pension, they'll generally go into the asset or the liability and then through the P&L. So just add that as a little last minute reminder. But in standard pension questions, what we've got here should cover almost anything you could be asked.